We are back for another week of Untamed Realty with Alex and friends. This is episode 7, which I can't believe we're already on 7 episodes. Today I have someone very special here with me. I really do have to say this because you guys seriously are like some of my absolute best clients.
Well, thank you.
I met you and your wife, Teresa. This is Drew Nelson. We're extremely excited to have him. So he is in the commercial space of lending, which a lot of people have asked for more details, more information. Commercial is not my forte, but this podcast, again, is really supposed to be for people who want more education in the real estate space. I feel like there's a lot of just like nonsense out there. And for me, I've been doing this now so long that it's like important to me to give back to the community, whether, you're an investor, you're looking to invest, you're an agent, you're a broker. I mean, just the whole scope of things,
Sure.
right? So we're trying to get all different kinds of people on here. But I met Drew and his wife, Teresa. Has it been like 8 or 9 years, 10 years?
10 years.
Okay.
Yeah.
And I guess I feel like we met at an open house. Okay. And I just did a podcast.
I still remember it. Yeah.
I just did a podcast for another team who they do over 600 million in volume a year, and they don't encourage their agents to do open houses. And so I think I used you guys as an example as saying like, you literally can meet the best people through open houses, and not just for business, but like friendships and other relationships that help each other out. And I think I did use y'all as an example because I was like, these guys have not only become great clients, but like friends,
For
And I
sure,
also
yeah.
feel like you and Tree are the type of people, like, we don't talk all the time, but like when we see each other, it feels very natural.
Nothing. Yeah. You just pick up where you left.
Yeah. So I like to ask like an icebreaker question to get
Sure.
started, because I know everyone's kind of always, a little antsy in the beginning. So from the very beginning, when I met you guys, I noticed that when we texted each other after like 8 o'clock, I would never get a response, right? And this was in like also my younger days of real estate, where I thought I had to work like through the night and do all those things. And I would pick up calls for clients at 10 a.m. I would get texts from y'all at like 4:30 in the morning. And as the years have gone on, I have always known you both to be early morning risers.
That's right.
So I want to ask about your morning schedule first, because I always like to ask how successful people succeed. And I feel like that's probably one of y'all's.
I think for me, the morning is when I get the most done. Right.
Okay.
And it's, and especially after having a kid, like it is the only time of true like peace and quiet too. Right.
Okay.
So 4:30 wake up every single day. I let our dogs out. Coffee's already made. I do that the night before. That's like one of my things. That's ready to go in the morning. Let the dogs out, come in, mess around on the computer for a little bit, do some emails, work out, and I am done working out right when my daughter gets up.
At what time?
That would be, so I start working out around 5:30, get done at 6:30. At the house.
At the house, right? Because you guys built out a
Peloton and dumbbells and whatever. Yeah, everything at the house. And then it's done at 6:30, get her up. It takes about an hour for breakfast and getting her off to school. And then the day kind of starts. So,
And I feel like that's just been both of your guys' routine.
Always.
Like, always.
Yeah.
So that doesn't even matter on the weekends. It's still 4:30, or is there ever a day that it's like,
I get up at 5 on Saturday
and
Sunday, so I sleep in. Yeah.
Okay, so you sleep in for 30 extra minutes.
Yes.
And what about Sundays?
Same.
Okay, and what about if you guys go out? Like
I try to keep it pretty consistent.
Okay.
Yeah, because to me, if I miss a day or two, like you get out of a rhythm really easily, and like your body kind of naturally just loses it, and you gotta get back into it.
Okay.
So
and what about evenings? Like when do you turn off? When is your sleeping pattern? All those
in
things?
bed by 9.
Okay.
Yeah.
Okay, and that's
I mean in bed.
That's like lights off.
Correct.
There's no TV in your room.
No.
Okay, so that's an immediate. No reading.
No.
Okay.
Mm-hmm.
See, and my goal, like I'm telling you, you and Tria, like I need to be on these two schedules. Like anytime I start waking up earlier, because I was on a good gym schedule, like going at 5, I literally think about you guys, because I was like,
that's how it started for me.
Okay.
Because even before kids, like I loved working out in the mornings.
Right.
That was the only time I felt like I could get a good workout in and not be exhausted after work trying to go get a workout in. So that's kind of how it started, and it's always just built.
And
there.
What age was that at? I'm just curious. Like how long have you been doing this for?
That's a good question. I don't know. It's at least been since we've been in Houston, so 11, called 11 years or
Okay.
so. Yeah.
Okay. How do you
I
feel
bet
like
it's
that's
longer than that.
probably, I would assume.
It goes back further than that.
And were
15
either
years.
of you not morning people, or was that just something that you developed together?
It was harder to be morning people like in our 20s when we were out until
Right.
1 in the morning.
Right,
So
right,
yeah,
right.
I
Okay.
think that evolved probably around like 30. This all started.
Okay,
Yeah,
I love that. So for
yeah,
anybody listening that's under 30, you still have some time to get it together. For the rest of us that are adults, we probably should get it together
right.
because I really have been trying to follow a new model because I am not a morning person.
Yeah.
It is so hard for me because I'm naturally a night person,
Yeah.
but I know how much of a difference just that extra hour and a half makes when that time is there to wake up and get things done.
For sure.
So do you start work emails or is it just strictly like personal stuff in the morning?
Some of both. I normally check like what's come in at since I put my phone down. I usually put my work stuff down by like 7-ish,
Okay.
7:30. So they've got a good hour and a half of not really having that on my mind. So you can kind of clear that before you go to bed.
Okay.
And so I'll check work and get some of that done. But it's really just my time in the morning. Like whatever I want to do.
Right. Okay.
I kind of have that first hour to do.
Okay. I love that.
Yeah.
I love that.
Finances, sports, whatever it is.
Okay.
Yeah.
That's amazing. So let's head right into what your profession is and what your role is. So you are now the managing partner at the company is called...
It's called Legacy25 Capital.
Legacy25 Capital.
Yeah,
okay.
We call ourselves a boutique debt advisory firm.
Okay. So yes, I did some research on
Sure.
LinkedIn because I've known you from starting at one bank and kind of moving your way through the process. I feel like every time over the last, you're like us, right? We move every 4-ish years. This is the longest we've been in a house, right? But every time I circle back with you, it's like, okay, no, I have a better position, bigger position at a different bank, right? Mm-hmm. And so it kind of seems like you've obviously successfully moved through that process. So if someone were to ask on the street, ask you, what do you do for a living? How do you explain your role to people?
In just like super simple terms?
Yeah, like layman's terms.
We help clients find various lending options for things that they are acquiring, typically around commercial real estate. There's a few other areas we get involved in, but we have clients who come to us with a need for a loan, and we go out to various lending partners, banks, debt funds, whatever it may be, to try and find them what they need.
Okay, perfect. And your clientele is at a higher wealth level, right? So
that's because of my background. So I was in private wealth and private banking for 13, 14 years. Mm-hmm. And that space is really high net worth individuals and family offices. So I would say it's an upper level of net worth.
Okay. Yeah. So if someone were to come to you and potentially need help, what's the baseline for what you're looking for? Because I get a lot of people asking me like, hey, I want to start investing.
Sure.
Oftentimes in Houston, I tell them, single family, I'm honest, like single family isn't always going to make you the return that people are looking for. And sometimes a commercial space is better depending on the finances that they have.
I'll give you a couple answers for that.
Okay.
I would say our average client net worth is north of 25 million.
Okay.
So it's a good size number.
Okay.
with multiple properties in that. We will from time to time see maybe like a first time person getting into it, right?
Okay. How often does that happen?
Not that frequently. It's probably like 5% of the time.
Okay.
I would say that I see. I'm not saying that's not happening, but that we typically see. And if that's a tough number to say like what you would need to be at, because it depends on what you're trying to buy too, right? Like you can get a commercial property for under $1 million. Right. You can also go spend 50 million on something, right? So I think some of that just depends on what they're looking for. But some of the stuff that banks are very keen on right now and that they look for is having significant liquidity after you would close on something, so they don't want to see every dollar go into a property.
Right. So how much were just on average, like how much reserves are they looking for then, like after a purchase?
So like a good rule of thumb is to have between 10 and 20% of any outstanding debt in reserves. Okay. So if you take on $2 million, you should have, call it 200 to 400,000 after everything is all said and done.
Okay, got it.
Yeah.
So when you're looking, like someone is again looking to get approved for something like
Mm-hmm.
this, it obviously you guys have a number of different banks and outlets that you can go to.
Yeah.
What's like what's the average credit score that people are looking for? Because I'm hearing that's going like all over the place. I also was
Yeah.
hearing that like that's potentially going away and you're going to be more approved based on like your entire portfolio as a
Yeah.
whole, not necessarily just your credit
Yeah,
score.
and some banks look at credit score harder than others, right? I mean, some are very collateral driven. They care more about the property. There's others that won't care about the property, but also care about the sponsor, right? The person who's going to guarantee the loan potentially.
Right.
And the problem with credit too is for our most active clients, they're getting their credit pulled all the time.
Right.
And
right.
so,
Right. Yeah,
right. And
that's
so they
so true.
they've got pristine credit when you look at it, never missed a payment, right? Everything's on time, balances are low, all of that, no revolving debt, whatever it may be. But you can still have a score like in the mid 6s or low 6s just because it's getting pulled all the time.
So how do you guys offset that, right? Because like certain banks, like you said, like why are certain banks more prone to go off credit and other banks are more prone to look at the whole picture?
I think that's a bank cultural thing.
Oh, really?
Yeah, that's just that's kind of bank by bank, their credit policy, what they look at.
Okay. Are you allowed to say like who you know or think has like the toughest approval?
No, I mean there's so many banks.
There's so many options,
yes,
right?
And it can be right. I mean, community banks to the mega banks. It's hard to say.
Do you have are you allowed to say like a favorite?
A favorite bank?
Are you allowed to say
no,
that? Okay,
no,
okay.
I'd rather not.
Okay, that's okay. That's okay.
I'll give you an example though. We're working on a construction loan for a mobile home park right now.
Okay.
Right? So this is one of the things that one of the loans that we've placed right now with the bank. They just want to see that you have at least a 650 score.
Oh, okay.
And that's it. But if it did come in lower that, which it didn't in this case, mm-hmm. There's always explanations, right? And if there's if it's a very strong and wealthy sponsor, well, they're going to overlook some of that too. So the biggest thing is like if they see lates and any kind of like foreclosures or anything like that, right?
Got it. So, which is pretty typical, I would assume, right?
Yeah.
So based on like just commercial spaces right now, obviously 2025 has been a little wacky of a year. So it's 2024.
Yeah.
What are you seeing people invest in the most right now?
Yeah. I would say industrial has been very, very hot over the last couple of years, especially like small bay industrial, smaller spaces.
What accounts for like a smaller space?
Well, and that can vary too. I mean, we're seeing everything from call it 5,000 square foot type places to like 20,000 square foot places, which still is on the smaller end. I'm not talking about like these massive, million plus square feet kind of distribution centers or anything like that. So that there's been a lot of movement in that. Rental rates have moved up very quickly in that space.
Interesting. And what are people converting those spaces to? What are you seeing?
So you see, I mean, those are great spaces because there's a wide variety of users potentially for it, right? All different kinds of companies, supply companies, air conditioning companies, pool companies, just all tons of different tenants can potentially fit in that, small manufacturing companies.
Okay.
So that's been a really good space. And you're seeing more and more product, kind of come online in that space.
Okay. That's great. What else are you seeing?
Retail's still been great.
Retail's been good. Okay. So cause I've heard, you always hear like, oh, retail's going away. Like there's tons of places that are for rent, but you're not seeing that right now.
Especially in good locations. I mean, that retail has held up very well. Once we got past the stage of like the world wasn't ending because of COVID. There was some fear initially in 2020 and mm-hmm. there were rent concessions given and rent abatements and all of that. But I think that's been a very steady space.
Okay. Yeah. What would you say is like kind of the third option for people? And I'm asking this because as you're going down the list, it's not what I would have expected, right? I would have thought you would have said like larger, multifamily, but obviously in a much bigger realm,
Sure.
apartment complexes, like all those types of things.
Multi was great for a few years.
Okay. When would you say that was?
I would say you could probably go back to like 17 even through 20. I'm trying to think when rates really started to rise. That was kind of the fall.
It was really like
2022,
2023.
Where rates increased very quickly. The cost of construction went up at the same time because inflation kept going. All of this.
Yeah. And I'm going there because the first thing that people who want to get into like a bigger commercial will come to me and they automatically say multifamily. And I always tell them, look, I'm going to direct you to a commercial broker, a commercial lender who knows more about this space. But it's interesting that you said the first two options are industrial and obviously retail, right? Because I don't think that's what most people consider good options.
Sure.
But I keep trying to tell people multifamily is so much harder than you think.
Yeah.
And right now, those ratios and numbers are not making a lot of sense.
No, and especially a lot of like the new Class A stuff that has been in construction.
So
and
explain that more because people don't understand what that means.
Like Class A, I would call her these brand new high rises, lots of amenities, very expensive. Those were doing great because rents were going up consistently at call it 5 and 7%, right? And some of those projects projected that in perpetuity, that rents were going to do that forever. Well, that has stopped, right? And so that has put some strain in that space for sure.
Okay. Why do you feel like what's your take on why that has stopped?
I think a lot came online, a lot of new options. I mean, you just look here in Houston, like in the Heights, right? You go corner to corner, how many new developments are there?
There's so many new apartment complexes.
It's amazing.
I'm wondering, what's the occupancy rate? Because there's no way that all of these are full.
And to be profitable, you need to be pretty full, right? Like 90% plus.
Yes. They're huge. Yeah. I mean, these are at least 200, 300 unit buildings.
We drive around and who is living in all these? And it's not like these rents are cheap, right? Like $2-3 grand plus so your target market isn't that big.
No. And so let me ask you this question, because this is something that people will ask me, because that's a perfect example. You're seeing all of these huge apartment complexes pop up all at once. But then I explain to people, well, think about how long it's taken for someone to accumulate the land, get the funds that they need in order to
entitlements, all of that.
Correct.
Yeah.
Permitting.
Years.
Right.
Yeah, potentially.
So most of these probably were purchased again in 2020, 2021. So don't you feel like a lot of these massive investors are almost like kicking themselves because they thought that they were going to be in such a different place, not expecting what was going to happen in 2024 and 2025?
Definitely.
So are you seeing people try to sell those once they're done? Are you seeing what are you seeing people do?
Yeah, well, spaces? I think banks have been pretty accommodating.
Okay.
Right. Because they didn't want a glut of
foreclosures and issues. Yeah. Okay. So when you say accommodating, what are they doing to help? Because 9 times out of 10, most banks are screw you.
No, I think banks have been accommodating, giving extensions, working with the owners and trying to figure out true solutions to buy some time and see if things stabilize.
Okay.
For a while, the theme was survive till 25 or something like that, right? Because everyone
say survive till 2027.
Yeah, no, it's gone farther down because everyone had thought by 25 rates were going to be low again. And rates, obviously, this is something that we can hit on, but rates determine are a big factor in what properties will sell for. Right. And so when rates were 3%, the limit. Yeah, the exit and projected sale prices on these big developments were huge, right? Mm-hmm. When rates are 6% or 5%, it's a very different story, and that takes away a lot of the potential equity that was in these properties.
Right. So let me ask you this from a commercial space, because we had a residential lender on, and obviously you guys project based off of numbers what the future holds, right? You have to. Were you expecting things from 2022 to 2025 to be as such a significant change as what's happened in the last few years?
I don't know. I'd be lying. I don't know.
That's a good question because
Yeah.
I tell people that all the time.
I don't
right?
know.
Like, were your projections like on point?
No, everything was wrong.
Okay. So like, how far off were we like on rates? Like, what were you guys projecting 2025 rates were going to be on average?
People have been wrong on rates for years at this point.
Sure.
Right. I mean, if you go back, I call it 30, 45 days, there was a 95% chance that we were going to get a cut, 2 more cuts this year. Right.
And
so that has changed now for this next.
Exactly.
And so I've stopped projecting what rates are going to do at this point because everyone has been wrong. There's a lot of variables that go in it. It almost seems like it's become a little bit political at this point too.
A little political. Oh, we won't go there. I try to keep it neutral, but we can.
So there's just a lot of factors there, and trying to project that is
so
tough.
How do you tell? Because like so many, like 99% of the population public always like just hones in on rates when they're trying to consider potentially purchasing any type of investment property.
Yeah.
And I am constantly telling people, you cannot go off of that, right? You have to go off of your projections based on cost to build, if that's what you're dealing with, cost to renovate, if that's what you're dealing with, time that's going to take, and then like what the current numbers are right now.
Yeah.
Like I can't predict what's going to happen 18 months from now.
Mm-hmm.
So when y'all are obviously dealing with such large amounts of money with people, that's a huge variation over time. How do you manage like clients' expectations with that? Like, because a lot of these loans take a long time.
They're 5 years, let's say, right? I mean, that's a kind of a normal commercial loan that we would look at as like a 5-year period. Anything from, I mean, it can go 2 to 10 and longer than that, but 5 is kind of the standard. Right?
Okay, so let's explain that for a second, because most people would say, well, what do you mean a 5-year?
Right, not a 30-year fixed.
Or a 50.
Or a 50, or a 50, right.
Or a 50 in 2025.
Yeah.
We're getting real crazy.
Yep.
So people will say, well, what do you mean a 5-year? So can you explain like when people are purchasing, what that exit strategy looks like and why that would be the average?
Well, sure. So typically a commercial loan is going to be about 5 years.
Okay.
And at the end of that, there's a balloon. So you have to either pay it off or you have to refinance, renew it. And that's normally what happens, is that either you'll shop it again to different lenders, or that lender will just renew it at the end of 5-year period.
Okay.
A lot of them are 20, 25, 30-year amortization. So that varies a little bit, where in residential, everything is pretty much 30-year fixed at this point, right? You don't see that many 15 years.
Clients like you, dude.
What?
15-year jumbos.
Sure.
Yeah. But again, you understand the interest that's accumulating, right?
Yeah.
Okay. So I guess my next question to that is, because you have a lot of investors who would say, okay, well then what do they need to be preparing for or trying goals to hit within that 5 years to make sure that if they're going to, let's say, try to sell something that they've held on to, because I think I hear that's a lot of commercial strategy. You tell me if I'm wrong there, but like a lot of times I'll hear people say, I just want to be in this commercial for, 4 to 5 years and then get out.
I think it depends. We've got clients that do both.
Okay.
So I've got clients that are under the age of 40 that have been super successful, and they will go out and either develop, or they'll find a property that needs a value add component to it and increase the value significantly.
Explain that.
So you go out and there's a company, let's say, that has a large industrial type facility, a warehouse, a little bit of manufacturing, a couple acres of property.
Okay.
They've decided to leave that property. They currently own it. So we would have clients that would buy that, and technically it's going to be vacant. They'll go out, they'll find a new tenant, they'll do the needed improvements, create pretty meaningful value on that. And after call it 18 months, 2 years, 3 years, whatever it takes, they'll sell that, take the profit, and do it again.
Yeah. Okay.
We also have clients though that are more established and at the older end of the spectrum, and they're, call it 50s, 60s, even 70. I have a client that's in his late 70s that, they have more stabilized type properties where consistent tenants, they're, the properties don't need a whole lot of work, and they just hold those properties long term because prices continue to appreciate for the most part, and it's mailbox money, right?
Right. And that's okay. So that kind of leads me in, like, there's so many questions I feel like I could ask, because it's such a good space, right?
Yeah.
Because like, I have clients like who personally want to come to me and they say like, okay, Alex, you're doing this new construction stuff and this investment stuff. And like Darian and I are trying to kind of like, again, get into and diversify our portfolio in so many different ways. And I feel like we are young enough where we can take some bigger risks, right? Because I feel like no risk, no reward. How much advice do you give like younger clients versus old? Like, because they're coming to you, I would like more also for not just, hey, here's what I want to do, but I assume like you guys really help them walk through the process of like how profitable whatever they're purchasing can be, or how much guidance do you give people in that realm?
The clients we deal with, they do a lot of that stuff on their own. They do. Okay. I mean, they underwrite any kind of opportunity themselves. They do projections. They do all of that.
Explain the underwriting themselves.
Yeah. So if they're buying a property that's going to be vacant, right, and they know they're going to have to go out and find a tenant to fill it, they'll look at what market rate rents are, what types of potential tenants they could find for that space. They'll look at their costs and build in some potential carry of, maybe the space doesn't fill up for 6 months. And then they'll put together a pro forma where it's like, we have a tenant in here, it's stable again. What is this worth at the end of, once that is all accomplished as well? So that's how I would view the underwrite. And a lot of times this is going to complicate things, but they have investors who have put money into these deals, right? Okay, and so there's rates of return that that they're projecting for these investors who are putting money into these deals with them.
Right. So okay, that kind of leads me down two separate roads of questions. So
that's a whole nother.
It is, and I'm gonna I know, and I kind of want to touch on that, but I guess okay. So like from a residential real estate perspective, I've realized like over the years, I have wanted to make sure that I become the expert when, especially like my builders and investors, flippers come to me, because that has become a pretty large portion of my business.
Yeah.
Or, someone like you guys, when they come to me and say, hey, we're keeping this, but we also want to buy some, like, I feel like my clients trust me enough to allow me to run comps, do research, help them kind of like navigate that. I know a lot of commercial agents, brokers. I sometimes feel like they don't always want to be the most helpful or the most knowledgeable because they are dealing with such large amounts of money, and they don't necessarily want to be responsible for that. And I've also had to be kind of cautious over the last few years, especially of how much advice I give, because oftentimes as the agent broker, a lot of that responsibility lands back on us, where we're like, okay, we gave you this advice, but you're the adult and you're the consumer at the end of the day. Do you feel like that responsibility falls on their agent, or do you see these people going to like their financial advisors and looking like, who do you see them going to really kind of bounce those ideas off each other?
It's a different world for sure.
Yeah.
Because in commercial, you don't see these investors and like our clients, they don't have an agent that they're tied to necessarily.
Yeah, they jump around all the time.
And you don't, not that this doesn't happen, but it's less common where you have like an agent that is showing people properties, right? Like that doesn't exist as much like it would in the residential world.
Okay.
Typically you have your listing broker, right? And they do a lot of the research. They put together the offering memorandum, which is really the document that outlines everything about a property. Projections, the current rent roll being just the list of tenants, how long they've been there, how long their lease runs through, the rate they're paying. And there's a lot of information in those documents. And then the client will kind of do their own, sensitivity analysis and underwrite it themselves, changing some of the projections maybe from those numbers. But but two very different worlds, the way that things operate.
So you don't see clients like consumer buyers getting into trouble where the listing broker is obviously kind of doing an intermediary situation in Texas where usually the buyer's not represented. Do you ever see that becoming a problem? Because obviously as the listing agent, you're representing the seller. So, and I've seen this with like certain large commercial properties that like even Darian's purchased where the listing agent has not, necessarily given the best information where yes, you have to do your homework, but like how well do we know that this is actually real numbers?
Right, that's part of the game for sure.
Yeah.
Is what, what's the due diligence package look like from these sellers?
Mm-hmm.
Right? Are they being, are their financials in good shape? Can you,
Mm-hmm.
can
Are they
you
flubbing
yeah,
numbers?
can
Like I
you
see that. I've heard
mhm.
that a lot too.
And some too. We just closed a loan on a small RV park north of Houston, RV and like self storage, right?
So
And
you're seeing storage in RVs a lot?
yeah, that's still a pretty good space too. There's money to be made. This one was I have a client that goes after kind of mom and pop type locations, right?
Okay.
That there's probably it's their only location. They're usually not managed real well. There's no signage. They don't have a Google presence. Like it,
It's
yeah, rents haven't been raised in 10 years, right?
right.
And
Yeah.
so those are good targets. They work out a fair price, but trying to get through some of those sellers' financials is really challenging.
Oh, I'm sure. Because
And
also too, you've probably seen like they've been owned by the same person for a ridiculous
exactly.
or a family for
Yeah.
decades and stuff like that
And
too.
so that's really all on the client then. They're taking on that risk. They need to understand that market, and be able to project what can we raise rents to? How much are we going to have to put in? All of that. So,
Mhm.
that varies kind of property by property. But yeah, the due diligence package from the seller is pretty important.
Yeah, yeah. And
Yeah.
I mean that's like I don't because I
And
guess
it's less standard than residential.
well,
Right? Like
right.
I'm
It's
thinking about, I had to fill out a
we
10-page form
we make you
of,
fill out
yeah,
10 million forms,
right.
right? But like it's very easy for us in residential to get sued. Okay.
Right.
Like I'm going to be really honest. The second we touch a seller's disclosure for our seller,
Mhm.
we get sued. If I have sellers all the time. This is so annoying. I have to fill this out. Can't you do this for me? I'm like,
Yeah.
no, because if I check the wrong box, they're coming after me.
Sure.
Right. Where I feel like in commercial space, it's just like the Wild West.
Yeah.
It's kind of like figure it
It
out.
is.
Okay.
I completely agree. I mean, I've described it that way too. It's the Wild West compared to residential, and that's part of why we don't get involved in residential. There's way more red tape and just hoops to jump through, and so
Mhm.
I mean, our focus really is on the commercial side.
Okay.
Yeah.
All right. And then that's leading me into my next question because we
Okay.
talked about investors.
Yeah.
Okay. So again, for somebody who wants to even get started in investing in commercial spaces, I always tell people it comes in a team and it comes in numbers. Like if you're
Mhm.
really trying to get started, I've heard the best way to do it is by, again, either forming some type of syndicate with a group or, I see friends get into it together, family get into it
Mhm.
together, because you kind of have to pool each other's money.
Right.
What do you see on average more of with what people do? Because most people don't have $25 million
Right.
to invest.
I think you're spot on. Right? I mean, it's great to know people that have a lot of money. That helps. That helps get started. I think the two big things are having your capital lined up, knowing that you've got the equity needed to put into a property if you're going to do it. And secondly, picking a space and just getting to know that space. So if it's going to be industrial, stick with industrial.
Okay.
And just know your target market. There's very few clients that we have that do everything.
Okay. So
There's a couple.
niche.
Yeah. Yes. Find your niche, find the area you want to target, and go after that business. But yeah, I mean, on the first few deals, a lot, especially if you're on the younger end, most people don't have a few $1,000,000 to put into a deal.
No.
Or a few $100,000 even, right?
No.
So yeah, pooling money with friends and and taking down your first one, that's kind of the
yeah. Like I'm in the process of again raising money for another project right now, right? But
and spreading the risk. Right. A lot of people don't want to take on the risk entirely themselves either.
No.
And yes, you're giving up return, but
to me, that's like invaluable knowledge that you can't replace.
Yeah.
Like people will ask me like, okay, you and Darian are doing all these investments and like your own stuff. And I'm like, yeah, it's a fake it till you make it type of situation. Like I hate to tell you that, but I have learned so much over the years of my own mistakes where, okay, not everybody has that cash to like miss that boat, but at the same time I'm like, well, but that's the only way successful people I feel like have really gotten to where they're at. Like they will mess it up along the way. So I guess like people again will ask from a raising money standard, what do you ever see like their syndicate proposal put together, because that has to be part of their loan package? Like are you seeing like what are people offering like percentage wise, interest rates back? Like if somebody's trying to raise a large amount of capital, what are they offering people? that they're trying to get that money from?
There's so many different structures.
What are some of the most common or kind of like, in your opinion, the best that you see?
So usually the main person will be the general partner, let's say. We'll just kind of keep this as simple as possible. And they will go out and raise equity from limited partners who don't really have a say in kind of day-to-day operations. They wouldn't be guaranteeing a loan.
Okay. So it's just silent investors.
Right.
Okay.
And so there's normally some kind of guaranteed return for them. Let's say it's 8% or 10% or something like that.
So is that kind of like the average that
I think that's probably right. Something in that, in that space.
Okay.
Yeah. And then for the general partner, they'll usually have some sort of agreement where they're going to capture a piece of the upside. So if they sell and once they've hit kind of the hurdles of the limited partners, they'll get an extra 20% of it, or 30%. Some are 50-50. The 50 would go to the limited, 50 would go to the general partner. So there's various structures on that, but I mean, I think that's pretty, that's probably your most common.
Okay.
Yeah.
All right. That's fair.
Yeah.
And what are you seeing like average rate or like rates right now for your,
like on actual loans?
Yeah. Like for your world.
I mean, we're seeing stuff under 6% again.
Okay. So that makes sense to me why you would say 8 to 10 for an investor, right?
Yeah.
Because like in residential right now, I mean, we're like on some of our stuff, we're like doubling that. And again, it's not as much money on the line. So like your percentage is going to be lower on your end versus ours. But like we're offering some people 12, 13, on return.
On their money.
Yes. On returns, just to make it worth their while to showcase like, okay, we can do this. We're going to give you such a good return. So you'll invest with us on the next one.
Yeah.
So okay, that's good. That's good to know though.
Yeah.
Right. What are your favorite type of like commercial loans to do?
One of the things we haven't touched on, we do a little bit outside of commercial real estate loans.
Yeah. Tell me.
So we do aircraft too.
Oh, what?
Which is really exciting.
Explain that.
Probably
aircraft. Did you hear that?
So coming from that kind of private wealth world, it's things people buy. I mean, aircraft are, that's something that those are fun to see.
Especially in like Texas, I would assume, right?
Yeah, those are great.
Okay, so that's like, private air hangars.
Yes.
That people are purchasing the land to then.
No, the actual aircraft. I'm talking.
You're actually
planes.
doing the actual.
Yes,
planes.
Yeah, we do aircraft lending. Yeah.
Okay, that's amazing.
Yeah. So that piece is pretty fun.
All right, I've been on one G7. It was G7. It was.
I think I knew that.
Yeah, it was pretty. It was twice actually.
Yeah. That was a few years ago.
It was twice, and it was like, I understand now. I was like, oh, I get this now. Like literally, you pull up one of our like family friends. The pilot's like, oh, is she coming too? And I'm like, no, like she's just. It's crazy. Okay, so like, what is that lending? Like, what's the average cost of planes these days? Like, what are people buying?
Well, but so that's all over the board too.
Okay.
I mean, you can go down to. I mean, you can go under $1 million to get an aircraft. I mean, typically what we would see would be between 3 and call it 20.
Okay.
Yeah.
What is a 20 million plane getting you these days? Like,
well, again, how old are is it new? Is it older?
I mean, right? I don't know. Like, I'm not even in the realm to like think about. I mean, Darian has that on his list. Like, okay, private jet. Like that's on the goal list, but I don't know.
Yeah.
Like,
and it's the aircraft lending world is interesting too, because there's banks that are, they'll draw the line at, we will only lend 65% of a commercial property.
Okay.
They're like, oh, you're buying an aircraft, we'll give you 95%.
Why is that?
I don't know. I mean, it helps because like there's wealth backing it, right? Like, I mean, there's a very wealthy sponsor usually who's buying this aircraft, but I don't know. I mean, those have held value really well. Some of those have appreciated just because, after COVID and that, right, there was a lack of inventory. But yeah, there's banks that really like that space and will lend, 90, 95% on a new aircraft.
Do you think it's because they're honestly trying to build a relationship with
their
clients?
Yeah, it could be because there's maybe business behind that ancillary stuff. Sure.
Okay, got it. So, did you have to like learn all about airplanes to have to do?
It was kind of like a fake it till you make it, like you said.
I mean, all right.
Until you do your first deal, you don't. Amazing. And there's a lot of moving parts that go on with aircraft loans.
Okay.
There's a lot of people involved, attorneys on both sides. And
who you have to write the contracts.
Yeah, there's a title company involved for aircraft loans which a lot of people don't know, like FAA liens, and so there's a lot of moving parts, and we rely on experts in that field too, for sure.
Okay, so you kind of had to like figure out who to pull in to do that. And how did that happen for you? Someone just said, "Hey, I want to buy a plane. Can you help me?"
Yeah.
And then you like,
that's exactly right. Yeah. And then I'm like,
why
okay,
not?
I gotta, being at a bank at the time, I'm like, I gotta call somebody who's done an aircraft loan before.
So cool, though.
Yeah.
So how long does a loan like that take?
You can, you can do those in 30 days. Yeah. 30, 45 days is fine.
Okay. Yeah. That's amazing. Yeah. Okay. I know we kind of have to wrap this up, but let me ask you a question.
Sure.
What has been, do you have like a crazy 2025 transaction story? Because I know in the lending world, you've probably seen it all. Or craziest over the last few years that you were like, okay, this was wild and a doozy, but.
Let me think through this. I'm going to tell you this one, and I'm not going to give specific details like where it is. So
don't give me specific.
Client bought a 1 million square foot industrial property, North Texas.
1 million square foot. Okay.
So really large facility. Mm-hmm. The company that owned it was vacating. They stayed and they took about a third of it. So taking on a really big price. They paid a little over $23 million for it.
Is that a steal for $1 billion square feet?
If you can fill it.
Yeah. Okay.
Yeah.
Okay.
And I mean, that basis is pretty good, right? And so the cost per square foot was pretty good. They went out, found great tenants, including one really large tenant that's going to end up occupying the whole thing. And so 3 years later, appraised for $65 million.
And they bought it for 23. And did they put anything into it?
A couple million.
That's it.
Yeah, they did pretty well.
Okay.
So you can that's a big dollar amount, a lot of risk, right? But
a huge reward.
Huge reward.
Okay.
Yeah.
That's incredible.
Yeah, huge reward.
I mean, was that kind of like your biggest like equity over such a short amount of time?
Dollar amount wise, for sure.
Okay. Yeah. Awesome. All right. Yeah. Well, let me ask you one more question.
Yeah.
What do you predict that's going to happen in 2026? Like in your world, like positives. Like let's stick to positive things.
Oh gosh. I don't know. I think rates are going to fall a little bit more.
Okay.
I really do.
You're not the first person who's told me this.
I think they're gonna come down. It seems like there's some just positivity around that happening, which is just generating activity. We talked about this before we started that, there was a rate cut, and truthfully like 5, 10, 15, 20-year rates all kind of stayed the same or went up a little bit, but it got people off the sidelines, even though the rates hadn't really gotten any better because they heard that there was a rate cut.
Yeah,
and so
it sure did.
Yeah. I mean, I think the Fed seems like they're intent on easing policy a little bit, but a lot of it's going to come down to like what happens with inflation, what's going on in the world. I don't know. It's a crazy time right
Nobody
now.
has any idea, right? We just have to be supportive of each other and figure it out.
But I think, just from, a lending perspective, banks are lending right now.
Well, that's what I'm noticing. I'm
especially
getting
in the
calls,
commercial world.
Left and right. Yeah. Like, hey, let's do a deal. Where even a year ago, if I called, they're like we're stopping everything.
No, banks are lending. And I think one of the things that has been eye-opening over the last few years, there is so much private capital right now.
It's crazy.
Unbelievable.
Where's all this money coming from?
Like, I see more debt funds than banks right now lending to. So
explain debt fund, because a lot of people don't understand.
So just a private, let's just call it like a fund that goes out and they give loans like a bank would, without being a bank. Right. That's probably the easiest way to explain it.
And are there
higher rates?
Yeah,
typically higher rates. They're more like bridge type facilities where a client's buying something that has a construction component or value add, or it's got to be transitioned to some kind of new property, and they need like a 2-year period, right? So you're paying 8, 10, 12% on that money versus 6% on something.
Can you explain though, real quick, like why people would go that route instead of
because a lot of banks don't want to fund that, right? So banks are less inclined to fund something that isn't stabilized or doesn't have existing cash flow, and just ease of transaction timing too. Some of these private lenders can close in 2 weeks.
Yep. Also draws if they have to.
Yeah. And a lot of them
stuff.
are non-recourse where they don't require a guarantee,
Okay.
which is important to some people too, just because they're taking on a whole lot of risk with the project as is. And so I think those are kind of the main reasons. So like certainty of execution, speed of execution, potentially non-recourse, and then just also that there's something probably not wrong with the property, but something that needs to happen in order to get it stabilized.
Right. Okay.
Yeah.
Perfect. Well, I could talk to you for like hours more.
Well, maybe we'll do it again
because I just think it's such good information that so many people want to know about, but they don't understand.
Yeah.
So, and you explain it really well.
Well, thank you.
So thank you so much for coming on. If you could recommend like one area, one person that I should call to have on, who should it be?
Can I say D?
Yes,
D.
Yes, you can. For my husband.
Because I want to hear the story. I don't even know all the ins and outs.
I know,
yes,
because
have him.
he's so private and he's so like quiet behind the scenes. And my husband is going to come on by the end of the year. That is the goal. And y'all are going to play golf again too. So thank you so much for being here.
Thanks for having me.
This
was
so
fun.
enjoyable. And we'll see you guys next week.